Hello friends, today I will discuss about the Elliot wave principle and in the series of corrective patterns today we will have a look at the ascending triangle pattern. In my Friday's webinar I have discussed the same topic but that was in the uptrend and I have shown you the diagram pattern how to find that in uptrend and where you can put your entry order for the long position. Similarly, today I will show you the pattern in the downtrend and how you will use this pattern to find the entry point while the instrument is going down. So in the downtrend, if you remember, the guidelines will remain the same and the structure in the uptrend will look like this. It is consist of the five waves A, B, C, D, E, and each wave is a corrective wave in itself. Means corrective wave means you can notice each wave in itself consists of three waves. So that can also happen sometimes that each wave will be consist of three wave in itself, or sometimes some exceptions will be there because market is very dynamic and no one knows that how exactly the market will move the next time. Similar principle cannot be applied all the time but roughly it will be equivalent to its previous structure, and that's why we can use this kind of patterns in the daily trading. So let's have a look on the chart. Before that, one more time have a look at the guidelines. A triangle is itself a corrective pattern which can contract or expand, and in my previous webinars I have already explained the contracting triangle and the expanding triangle, and after that it can ascend or descend. So I will discuss that on chart, it will be better. Then I have shown you it is composed of five waves. Wave 4 and 1 can overlap, but the thing is that wave 4 cannot go beyond the origin of wave 3. So wave 4 should be shorter than the length of the wave 3. As we know in the Elliot wave, wave 3 cannot be the shortest wave. Similarly here, as it is also a 5 wave series, so wave 3 should not be the shortest one. And the internal structure will show the alteration like just I have shown you. It will consist of three waves. It can consist of three waves in itself. So let us have a look on chart to find the Elliot wave ascending triangle in the downtrend. The conditions will be that instrument should be in the downtrend. Then only it will be easy for you to find that pattern. So what we will do, we will first check the higher time frame trend in that particular instrument. So instrument must be in downtrend. Then only it will be easy for us to identify the ascending triangle in downtrend, because similar triangle can form in uptrend also, just the entry points will be different. But when we know the instrument is in downtrend, then we can apply the entry point which is needed in downtrend. Or if you will look for this kind of pattern in the instrument which is in uptrend, then you can get messed up and unnecessarily you will be losing money. So first of all, look for instrument which is in downtrend on the daily time frame. So Euro USD is the best instrument I thought, as it was in the downtrend in the 2018, from the mid 2018. So I am discussing this pattern in the Euro USD, and this is the 15-minute chart. Why? Because I have searched a lot to show you a little more similar pattern as you show on the show as I have shown you in the diagram, but I am not able to find that. So finally I turned out on the 15-minute time frame and I got this. So to identify a Elliot wave ascending triangle pattern in a downtrend, we need a series of higher highs and lower highs. Then only we will get the expanding pattern. Two conditions are there. Instrument must be in a downtrend, and then we must see a series of higher highs like this high is higher than previous high, and similarly this low is the lower than previous high low. So we have got that series. The third thing will be when we see a 2 points, when we get a 2 points, then we can get the idea of the third point. If you will notice minutely, we will come to know that from here the instrument started moving, and don't worry for the kind of structure you are getting. You just need three things: that instrument is in downtrend, and then you are noticing the series of higher high and the lower lows. Because what happens, it's not written anywhere in the guidelines that you should join these kind of points or that kind of points. So nothing to worry about that. Just roughly we have to find that pattern, because we knows that these days markets are so dynamic. Most of the time they don't follow any pattern. But then you will ask why we are learning so many patterns, because there is a reason for that. It's very good to keep this kind of pattern in mind, because what happens for the more retail traders, we don't know. Suppose you know that instrument is in downtrend, and if you will notice open a position here, first it will go in loss, because you don't know that time how long that investment will go on. For that purpose, because these patterns generally occurs in a retracement period. So these patterns to the retail traders will help to get the entry point. For that purpose, I am teaching you various corrective patterns so that you can use these patterns in the corrective mode of that instrument, and your chances of winning trade will rise. That's my purpose here. So from my experience, I can say that don't worry about the joining points or the trend line, what kind of structure you are getting. Just you need three things: when the instrument is downtrend, then the series of higher highs and lower lows, and then the five wave structure. So when we notice such a kind of pattern, we have got the roughly, if we will join these 2 points, then we are getting this kind of structure. Our next task is to find the five waves. Are we getting a five waves in this? So if you will start from here, this will be the wave 1, or you can start from here also, because next touch we have what? This will be a first wave, And just now I have shown you that each wave consists of corrective waves in itself. This will be a second wave, then third wave, fourth wave, and this is the fifth wave. And this is the last leg. So we have got the 3 touches on the upper side and 3 touches on the lower side. Generally, the guideline says one should enter into trade as soon as you see a breakdown from this line. So here it had got a breakdown and you can open the short trade here by keeping a pending order, because no one knows at what time this instrument can see a breakdown to the lower levels. But I have modified one thing in here. When you join the 2 points, you will get the idea of the third points. As soon as you join these 2 points, you get the idea of the third one. This is a hypothetical, means this is the though it has occurred, but similar kind of structure, no one can guarantee you will get the similar kind of structure in the future. That will be something different, almost different. So just keep in mind that when you join the 2 points, join them anywhere. Doesn't matter whether you are joining a swing highs or the closing price. Just join the 2 points and then you will get the idea of third point. So when the instrument reaches on the lower side and you get the 3 points, or whenever you see a 3 points on the lower side and 2 points on the higher side, you can keep watch on that instrument continuously. So this way it will be easy for you to open a trade as soon as it reaches to the upper level, and from there you see sellers trying to take control. Like this, what happened here, you got the inverted pin bar, the so much long tail here on the upper side clearly. But sometimes what happens, instrument will come here, then it will come here, then again it can go back to the higher level. That can also happen. So for that purpose, just keep watch on, and the guideline says you should keep open the trade here when it sees a breakdown to the lower side. But you can take a risk here and try to catch the top and bottom. So in that series, you can try to open a trade here as well. And if you will notice, it is looking like a structure exactly what we have seen in the diagram. I will show you one more time. So our structure is like this, and similar structure we are getting here as well. So we have got the 1 point, 2 point, and then third point, fourth one, and the fifth one. So fifth point we got there, and then you can take a risk here. You can use, because we don't know here when the instrument hears, we actually will not be knowing whether it will go down or up. It looks very easy. Oh, I could have opened position here. But when you are actually looking at the chart, and when on the live chart, when the market is moving, that time you will not be knowing that whether that instrument might be headed to. So for that purpose, Always you can take help of the ATR to get the range of that instrument, and by adding that value into that you can keep a pending order here in this range to open a short trade. I will mark the point so it will be easy for you to remember. This is a 1, this is 2, 3, 4th and 5th. So as soon as we get a 5th point, we can open a short position. I am little sick, friends, so today you can find my voice little unhealthy. So kindly bear with me for today. So here you got the opportunity to open a short trade. Take the help of ATR to get the idea of the you will get ATR in the volatility section, and ATR shows us a range of that time. So here it was having almost 10 to 15 pips range, and that is a very good stop loss. 15 pips stop loss or 10 pips 20 pips stop loss is very good to follow. So you can open keep a pending order, but here what could have happened if you have kept the pending order, you would have missed the trade, because after that the reversal the instrument never moved to the upside, so you could have missed that trade. Doesn't matter. Second time you could get the opportunity here. As soon as it sees a breakdown to the lower side, you can open a trade here as well. And the stop loss. But what happens? If you will open a trade here, stop loss will be the latest swing high, or generally technically it has been suggested that you have to keep the stop loss above this range, or at least the half of near the half of this range. But sometimes what happens, instrument again reverses back to the earlier levels, and then again it retraces to the down. So sometimes what happens, unnecessarily you will get stopped out first, and then the instrument will move to your desired direction. To avoid that, you can try to catch the tops here. If you get opportunity, well and good. Sometimes when the trend is very strong, you can get this kind of opportunity here. As soon as you open the short trade here, by keeping the pending order, you see the breakdown, then stop loss will be this level, because this is the latest swing high in the series. So latest swing high will be your stop loss. This will be your swing stop loss, and after that what you can do, suppose you have opened a trade here around 1.137, This value is around 1.141, that is the 40 pips stop loss, not feasible at all. Then you will need to target at least 80 pips. Then only your trading will be profitable. Or what you can do, you can wait for the retracement to the higher level. But here, this is the very good example to teach. Most of the times, this kind of scenario happens and the retail trader misses an entry. Because suppose if you will open a trade here, like here, if you will open a trade here, then stop loss is very wide, 40 pip stop loss, and suppose the instrument reverses back to those levels, you will be losing a 40 pips, and for the intraday kind of purpose that's not a good idea. So that's why for intraday always try to catch tops and bottoms, because it's very good to see a scenario, a diagrammatic scenario, but in the real time trading, real life trading, or the live trading, that exactly doesn't work. You will need to use your logic, and you will need to use own ideas to open a trade, and to that's why it's always better to learn the all knowledge and finally take decision your, by yourself. Then only you will be having confidence in that kind of trading and in your system, because the system you cannot get, no matter how long you try, you cannot get a perfect system which will be profitable in all the time of your life. Sometimes you will need to face loss, and sometimes your trading will go in profit, and profit and loss are part of our life. So the purpose should be, your purpose should be to minimize the stop loss and maximize the profit. That's why just follow the things that if you are an intraday trader, always look for such a kind of system where you will, from where your stop loss will be very less and your profit target will be in multiples of the risk you have taken in each trade. So this is the one example of the ascending triangle in the downtrend. The instrument should be in the downtrend, as you can see here. It is in the downtrend. You have got the series of lower highs and the higher lows. So instrument is in downtrend, and then for the sake of retracement it is time to move to the higher side. But when you see a 2 points, you can get the idea of the, you will automatically will get the idea of the third point, because that's why the it is the use of the trend line in the technical analysis. That's why most of the trader uses a trend line, because trend line gives us idea of the third point. There are so many ways to draw a trend line, but just in as we are looking for a pattern, doesn't matter how you are drawing, just try to get the two touches, because if you will keep looking for exact structure, you will not get that. For that purpose only I keep saying that try to get the two touches, as I tried to get here, because the structure will not be, even if this structure is not nowhere similar to the structure I have shown in the diagram. It has followed its own structure. That's why you will need to use our logic. But roughly you will notice that the our conditions of higher high and lower lows get followed in this pattern, and we are getting ascending triangle structure. That's it. That only matters. So friends, just use this pattern for the entry points for the trade. For the short trade, you can use this as one of your entry point, or if you misses it, then you can look for a breakdown structure, and as soon as you see a breakdown, you can open a short trade here as well. But from here, the risk will be stop loss will be little wider if you compare the stop loss in this kind of system, in this kind of strategy. So practice this in demo, means practice this, try to scan the so many charts and try to get the points, try to join them and compare them with the structure you will see in the diagram. So that's how when you will do a good practice, it will easily come in your mind that this structure is similar to that kind of pattern. And when the pattern comes in mind, it will be easy for us to open a trade with the desired stop loss. And for the stop loss, we can even use a ATR. We can get help of the ATR, and then accordingly we can put our stop loss. So that's it for the day, friends. Sorry for little inconvenience because my voice is little because of cold. I am suffering. So sorry for that. And thank you all. I will be back with another topic tomorrow.